The downtrend in stock prices has rekindled interest in dividends. And let's face it, if equity performance going forward is going to be lower or is expected to be lower, that means dividends will naturally become a larger component of the total return that equity investors get. Today's audience requested ETF battle is a matchup between a pair of dividend funds. One is from iShares, the other is from Vanguard. It's HDV versus VYM. So which ETF is the better choice? Find out right after this. Welcome to ETF Battles. I'm Ron DeLegge, and it's good to see you again. Keep your ETF battle requests coming. Hit us up with your ETF tickers in the comment section below or on our Twitter feed at ETF Guide. Don't forget to punch the subscribe button along with the like button if you've been enjoying the program, along with our other lineup of programs here at ETF Guide TV. Now, today's contest is the first part of a double header request from a viewer named Jed. And it's a face-off between two high dividend ETFs. One is from iShares, ticker symbol HDV. The other is from Vanguard, VYM. Congratulations, Jed. We chose your ETF battle, and be sure to hit the comment section below to claim your prize. You get your choice of an ETF battle shirt or a coffee mug. Judging today's dividend bout is Cinthia Murphy with the ETF Think Tank and Todd Rosenbluth with ETF Trends. Judges, welcome back to the show. It's great to see both of you.
Hey, Ron. Thanks for having me.
Great to be with you both.
So our four battle categories are cost, exposure, strategy, performance, and yield are combined. And then we've got our mystery category. And I've got the scorekeeping chores. And at the end of the show, we're going to declare an overall winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. So let's start with Todd. Let's kick things off with cost. Give us your analysis.
Well, this is pretty straightforward. These are two extremely cheap ETFs. VYM is 2 basis points less than the HDV product from iShares, but I'm going to give that a tie. As we'll see as we get through performance and exposure and perhaps the mystery category, these two ETFs are quite different, but we think that the cost is both under 10 basis points. You can't go wrong if you're looking for a cheap ETF from two of these leading ETF providers.
Thank you, Todd. Cinthia, you're next. What's your analysis when it comes to cost?
I agree with Todd that the difference is minimal here, but I still think VYM has a slight edge. It's only 6 basis points. It's hugely liquid. If you're looking at the power of compounding costs in the very long term, which a lot of Vanguard ETF investors are, the less you pay, the more you keep. So I'm going to give it to VYM.
That takes us to our next category, exposure strategy. Cinthia, you're still up. Give it to us.
So these funds, to Todd's point earlier, they are very different. And it really, again, it always depends on what you're trying to achieve, of course. So, for a high dividend yield ETF, I actually think HDV is the more interesting one. The way it screens its stocks and the way it weights its stocks, it really is intended to give you that really extra punch on the high dividend space. So when it looks for the companies, it looks for the companies that have, a financial moat relative to peers. It looks for sustainability of dividends, not just high dividends. It looks for earnings power. And so it really is a quality mix of stocks that then are weighted by their dividends. So you really get, the highest dividend stocks weighing the most in this portfolio. So versus VYM, for example, which is more of your vanilla approach. It's a market cap weighted portfolio. It's much broader. You're talking 75 holdings in HDV versus 400 and something holdings in VYM. So it's a much broader play. I kind of like that concentrated pack punch of HDV in this category.
Thank you, Cinthia. Todd, you're up next in exposure strategy. Do you agree with Cynthia's analysis?
Well, I'm going to take the alternative of this one. So VYM is my pick, in part because, as Cinthia mentioned, it's more growth oriented or more core from a broader part of the portfolio, whereas HDV is value oriented because it's being weighted based on that dividend yield. It has almost no or much less exposure to financials, which is a leading sector you'd expect to have within both a dividend category or even a value category. So VYM has exposure to healthcare, staples, financials in particular. We think it's just more diversified at a sector level. And if it's going to play a role within a core part of the portfolio offering some income, which is how I would think it should be able to play, then VYM is my pick.
Performance and yield is the next category. Todd, you're up. Give us your take.
We're going to look at this from a performance perspective. Maybe my colleague's going to add in the yield component to it. This is going to be a tie for me. And it's going to be a tie in part because the short-term performance favors HDV. It's heavily weighted or relatively heavily weighted towards energy, which has been in favor in the past year. But over 3 years, VYM has been the stronger performer. That diversification has added value to the portfolio. But I wouldn't want to punish a fund, even though its recent track record has been so much stronger. So again, it matters how short a time period you want to look at your historical performance. HDV, stronger recent performer. VYM has a better longer term record. So I'm going to give a tie to these two ETFs.
Cinthia, you're up in terms of performance and yield. How do you see it?
I agree. Time horizon is everything here, and Todd is absolutely right. But I will, for the sake of competition of these funds, I will pick HDV. The short-term performance, I mean, this thing is up 6% year to date. VYM is actually down on the so far this year. It's giving you, 50 points higher in yield than VYM is. So you're picking up performance, you're picking up stronger yield. If you believe in that energy story, at least for the time being, 20% of this portfolio is in energy versus I think 9% in VYM. So again, it all goes to time horizon, but I think for the today's story, HDV is performing better. It is delivering a better result.
Our mystery battle category is next. This is where our judges can pick that single factor or multiple factors that they feel are crucial to today's contest. And Cinthia, you're up. So what is your mystery battle category and who wins it?
So I'm going to go with equity beta, it's a very, simple, basic metric, but it's just basically how sensitive these portfolios are to the performance of the broader market. And HDV has a beta of about 0.9 relative to the broader market, where VYM is pretty close to 1 to 1, meaning HDV is about 10% less volatile than the broader market right now. If you pick a segment benchmark like an MSCI high dividend yield index, then HDV has a 0.8 beta versus almost a 1 to 1. So you're talking about 20% less volatile than this traditional segment. And I think, in less volatile ETFs, sometimes you give up upside in bull markets, but that's not where we are today. So I think perhaps a smoother ride, a little bit less volatile ride, may be something appealing. So I am going to give to HDV.
That's solid analysis. Thank you, Cinthia. Todd, you're up next. What is your mystery battle category and who wins it?
Well, what's interesting is we're looking at the same facts, but having two different opinions about them. And that's fair. That's what debate is supposed to be. So my mystery battle category is going to be diversification at the security level. And what concerns me is that HDV is heavily concentrated in 5 stocks. It's about a third of the portfolio. Exxon and Chevron dominating the portfolio overall. The energy exposure that Cinthia talked about, to me, is a concern in terms of how much overweighted it is relative to the broader marketplace. So we like the security level diversification. It was mentioned earlier about 400 stocks, dividend paying and high dividend yielding stocks within the Vanguard VYM ETF. That's going to be my winner from a security level diversification.
Okay, very good. Thank you, Todd. Now we're going to move to the part of the show where our judges get a chance to give us their overall battle winner. So Todd, you're up.
Well, my winner is VYM. I had ties, I believe, in 2 categories and VYM winning. But I think it's even more applicable since Cinthia mentioned that it's 2 basis points cheaper. That is cheaper for VYM, and people are looking at ETFs from a cost standpoint. So we think VYM can fit into the broader portfolio as a replacement for a core strategy offering you income as an income alternative. I think perhaps Cinthia is going to have a different view as to how it's going to fit in the portfolio. Again, that's why it's debate.
Thank you, Todd. Cinthia, your last opportunity to give us your overall battle winner.
Yeah, if we're talking, a core position, a long-term buy and hold position, VYM is a phenomenal fund. It's broad, it's vanilla, it's diversified, it's super cheap. I think if you are looking to really just capture the high dividend space right now, because you're looking for that income alternative, you're looking for that possibly more tactical solution to a problem you have today, given the state of bonds and the fixed income situation, I think HDV is a more interesting play because it is more concentrated, because it is, giving a higher yield. You could argue it's a more tactical position versus a strategic, core position, which VYM would do best. So overall for this category, I like the punch HDV brings to the table. For the time we're living in.
Well, our judges have weighed in, and according to my battle scorecard, this is a split decision between HDV and VYM, and our judges traded awesome points. I guess, Todd weighing in favor of VYM, liking it for its diversification, liking it for its lower cost. But some things that jumped out, HDV, again, being more concentrated in the energy sector. Cinthia liking that. And of course, that's helped boost performance because energy's been a great performer in 2022. Todd being a little bit concerned about that concentration in HDV to the energy sector, especially 5 stocks that particular ETF is concentrated in. So they had some differing opinions on that. And then in terms of mystery, our judges had differing viewpoints. Exposure strategy, different viewpoints, and the overall battle winner, complete opposites. Oil and vinegar, and what I learned in terms of ice cream, because somebody mentioned plain vanilla. So if I'm thinking in terms of ice cream, HDV would be pralines and cream, and VYM would be plain vanilla. So that's one way to think about it. But overall, I think our judges gave some awesome points and, of course, contrasting points. And that's one of the whole premises of this program, is to give you different perspectives and then, of course, let you make the final choice in terms of what ETFs you like and how that fits into your overall portfolio. So a job well done. Thank you, Todd and Cinthia, for your excellent and timely analysis. Keep up the good work.
Thanks. Always a pleasure.
Great being with you both.
Visit the description section below for research links to our judges. While you're there, you can also visit our viewer resources section. We've got online classes, tools, and a weekly newsletter. Which ETF battles would you like to see in our next episode? Post your ETF ticker symbols in our YouTube comment section below, or hit us up on Twitter at ETF Guide. Give us your ETF ticker symbols, and if we choose your battle, you win your choice of an ETF Battles shirt or coffee mug. I'm Ron DeLegge. Thanks for watching. We'll see you next time.